Hello, and welcome. If you deal with India's tax system, you're probably very familiar with the maze of TDS sections. Well, get ready, because that's all about to change. A brand new Income Tax Act for 2025 is here, and it's not just a minor update, it's a complete overhaul. Today, we're going to decode exactly what that means for tax deducted at source, or TDS.
So, just to make sure we're all on the same page, let's do a quick refresher. TDS is basically a pay-as-you-earn kind of system. When a company pays you for a service, they don't give you the entire amount. They snip off a small portion for tax and pay it directly to the government for you. You know, it ensures a steady stream of revenue for the government and, in theory, makes tax compliance a bit easier for everyone involved.
All right, here's our game plan. We'll kick things off with the big why this massive legal change was needed in the first place. Then we'll get to the single biggest shift in how TDS works. After that, we'll zoom in on some key section-by-section changes, and we'll wrap it all up with a really practical checklist to get you ready for 2025.
So let's just dive right in. The Income Tax Act we've been using, it dates all the way back to 1961. So after more than 60 years, you have to ask, why change everything now?
And that really is the million-dollar question, isn't it? Why go through this massive effort? Well, the short answer is, the old act had just become a tangled mess. Over the decades, so many amendments and additions were bolted on that it became incredibly difficult to navigate. It was just time for a fresh start.
So this is basically the blueprint for the 2025 Act, and the goals are pretty clear. Consolidate all these scattered laws into one logical place, use technology to reduce face-to-face bureaucracy, and the big one, simplify the whole tax structure. So you see, this isn't just a patch-up job, it's a complete redesign from the ground up.
I love this analogy because it perfectly captures the spirit of the change. The 1961 Act was like this old, beautiful building. But over 60 years, all these weird corridors and extra rooms were tacked on, and it just became a maze. The 2025 Act? It's meant to be a modern skyscraper, designed from scratch to be logical, clear, and efficient.
And you know, nowhere is that new, modern design more obvious than with the TDS provisions. For a lot of us, this is the real aha moment of the new law. Let's take a look at how this consolidation actually works.
This right here, this visual says it all. The old system was this crazy patchwork of sections. You had 194C for contractors, 194J for professionals, 194I for rent, a different section for practically every type of payment. The 2025 Act just sweeps all of that away and combines almost all of them into one single master section. Section 393, Simplification through Consolidation. That's the key.
Okay, so what does this new consolidated structure really mean for you day to day? Let's break down two of the most significant changes that you absolutely need to be aware of.
First up, this is a big one. And honestly, it's going to be a huge sigh of relief for so many businesses. The new act gets rid of those really harsh, higher TDS rates that were being applied to people who hadn't filed their income tax returns.
Under the old 1961 Act, these two sections, 26AB and 26CCA, created a massive compliance headache. As the payer, you had to check if your vendors had filed their tax returns, and if they hadn't, you had to deduct tax at a much, much higher rate. The 2025 Act solves this by just deleting the sections. They're completely gone.
Now, the practical impact of this is huge. For businesses making payments, you no longer have to do that tedious, time-consuming check on every single vendor. And for the payees, well, they still absolutely face penalties for not filing their returns, don't get me wrong, but they won't get hit with this extra high TDS rate at the time of payment.
All right, the second key change brings some much-needed clarity to another common area, payments that a partnership firm makes to its own partners. This is now formally integrated right into the main TDS framework.
As you can see from this table, the actual rules haven't really changed. It's still a 10% TDS on payments over 20,000 rupees. The thing that has changed is its address. This rule moved from being a standalone section, 194T, and now it's slotted right into the master table of section 393. This makes it a crystal clear part of the standard TDS process.
So, what does this change in structure actually mean in the real world? Well, for the firms, it's now a mandatory compliance step that's impossible to miss. For the partners themselves, it's going to affect their cash flow because that tax is now being withheld right at the start. And for accountants, this really cements the need for a clear, documented process for these specific payments.
Okay, so we've covered the what and the why. Now let's talk about the how.
how do you actually get your business ready for this big transition?
Here's a practical 4-step checklist to help you get started. Step 1. Update your accounting software. All those old TDS sections need to be remapped to the new Section 393. Step 2. Train your team. Make sure they understand this new single section structure and, more importantly, that they don't have to check for non-filers anymore. 3. Use this as an opportunity to clean up your vendor master data. And finally, number 4, if you're a partnership, get that new partner TDS process locked in right now.
So, if you only take one thing away from our discussion today, please let it be this: consolidation. The entire philosophy behind the 2025 TDS changes is moving from a complex, scattered mess of rules into a single, unified framework under one main section.
And that brings us to a final question to think about. The goal here is simplification, and on the surface, this huge consolidation effort looks like a massive step forward. But will it genuinely make life easier for taxpayers, or will new, unexpected complexities pop up from the fine print? I guess only time will tell.
We really hope this guide helps you navigate the changes that are coming. If you found this breakdown useful, please do us a favor and like, subscribe, and share it with anyone else who needs to get ready for the 2025 Tax Act.
This video is for educational purposes only and does not constitute professional advice. Tax laws are subject to amendments. Please consult your professional advisor before taking any action. This is an AI-generated video.